Have you ever dreamed of living in a spaceship, exploring the galaxy from the comfort of your own home? Well, what if I told you that dream is closer to reality than you think? Not in a galaxy far, far away, but right here on Earth. Welcome to the Starship 01, a tiny house that's literally out of this world. From the outside, it's not just a house, it's a statement. A sleek, silver metallic shell that gleams in the sunlight with custom-welded fins and a pointed nose cone that looks ready for atmospheric re-entry. It rests on hydraulic landing gear, not a traditional foundation, so you can raise and lower it with the push of a button. And see this main entryway? It's not a door, it's a fully automated ramp, just like you'd see in the movies, complete with sound effects and LED lighting that guides you aboard. It's the kind of entrance that makes every arrival feel like a mission launch. Alright, let's head up the ramp and step inside. The first thing you notice is how open and surprisingly spacious it feels, even though we're in a tiny home footprint. The interior design is pure retrofuturism, inspired by classic sci-fi from the 70s and 80s. Clean white walls, curved surfaces, and continuous lines create a seamless, pod-like environment. There are no sharp corners here. Everything flows. The large, panoramic cockpit window at the front isn't just for show. It floods the entire living area with natural light and gives you an incredible, unobstructed view of your surroundings. Whether you're parked in a forest, by a lake, or in your own backyard, it makes you feel like you're piloting your life through the cosmos. Now, let's talk about the command center, which doubles as the main living space. Forget your standard sofa and coffee table. Here we have a circular seating pit built right into the floor. It's upholstered in a durable, vibrant orange fabric that just screams retro cool. In the center, a holographic projector rises from the floor to display entertainment, maps, or even star charts for that authentic starship captain experience. The entire space is surrounded by control panels, but don't worry, they're not just for looks. This is the heart of the home's smart system. From this central console, you can control everything. The lighting system, for instance, isn't just on or off. You can change the color, the intensity, and even set it to red alert mode for fun. The climate control, the sound system, the window opacity for privacy, it's all integrated. You can even activate the Starfield mode, where tiny fiber optic lights embedded in the ceiling twinkle like a distant galaxy. It's incredibly immersive and perfect for winding down after a long day of terrestrial adventures. This isn't just a living room, it's a mission control for your comfort. Moving on from the command center, let's check out the galley. In a spaceship, every inch of space is precious, and this kitchen is a masterclass in efficiency. It's compact, but it has everything you need. The countertops are made from a seamless, polished stainless steel, giving it a clean, industrial look. The appliances are all high-tech and integrated. We have an induction cooktop that heats up instantly, a convection microwave hidden behind a sliding panel, and a pull-out drawer refrigerator and freezer. Even the sink has a cover that sits flush with the counter, giving you extra prep space when you need it. And see these overhead compartments? They look like spaceship storage pods, opening with a soft touch mechanism to reveal neatly organized shelves for all your food and supplies. It's designed to make cooking feel efficient and futuristic. Now, where do you sleep on a starship? Let's head to the sleeping quarters. Instead of a traditional bedroom that takes up a lot of space, the Starship 01 features 2 sleeping pods, built right into the wall. They look like something straight out of a long-haul space freighter. Each pod is surprisingly cozy, with a comfortable memory foam mattress, its own ventilation, a reading light, and a small screen for watching movies or checking your mission logs. The doors slide shut for privacy, creating a quiet, dark environment that's perfect for a deep sleep. It's a brilliant way to have comfortable sleeping arrangements without sacrificing daytime living area. And when you're not using them, they just blend seamlessly into the wall. It's the ultimate space-saving solution. Of course, even astronauts need a proper bathroom, or as we call it here, the decontamination chamber. And this one is pretty luxurious for a tiny home. The design continues the curved, seamless theme. The walls and floor are covered in a waterproof micro-cement finish that gives it a very clean, molded look. The shower is a zero-entry, walk-in design with a rainfall shower head that has built-in LED lighting. The toilet is a high-tech composting unit, making the home incredibly eco-friendly and off-grid capable. And the vanity is a floating unit with an integrated sink and a smart mirror that can display the time, the weather, and your daily schedule. It's functional, stylish, and keeps with the futuristic aesthetic of the entire home. One of the most impressive things about the Starship 01 is how it's powered. True to its off-grid exploration theme, it's completely self-sufficient. The roof is covered with high-efficiency, flexible solar panels that are almost invisible against the silver shell. These panels charge a powerful lithium-ion battery bank stored in the undercarriage, providing all the electricity needed to run the lights, appliances, and smart systems. There's also a sophisticated rainwater collection and filtration system, so you have a constant supply of fresh water. They dumped silver. Part 2. The market may never be the same. While Part 1 focused on the immediate shockwaves and structural issues in the silver market, Part 2 dives deeper into CEO perspectives, market manipulation theories, and the industrial and geopolitical forces reshaping the way silver is traded today. CEOs admit market behavior is unprecedented. In private meetings over the last month, several leaders in the commodities and financial sectors have admitted what many retail investors suspected. We've never seen anything like this. A CEO of a leading silver mining company remarked off the record, "The disconnect between physical supply and paper pricing is wider than at any point in my 25 years in this industry. It's not just volatility, it's systemic misalignment." This statement reflects a growing concern across boards from New York to London. The market may no longer operate as a free price discovery mechanism. Executives at financial institutions also admit that automated trading systems and margin mechanics have become dominant market movers, often overriding human judgment and economic fundamentals. This has sparked internal debates on whether exchanges need structural reform or stricter regulatory oversight. Algorithmic selling versus physical shortages. One of the most striking developments in recent weeks is the sheer scale of algorithmic trading impact. 1. High-frequency sell-offs. Part 1 highlighted, algorithmic systems can detect volatility and automatically sell positions. But insiders now reveal that some firms have programmed algorithms to push silver futures down aggressively when inventory signals are low, creating artificial panic. A commodities hedge fund executive shared, "It's profitable for some to force the market lower, especially when you're holding derivatives that gain when the underlying price falls. The physical market may be screaming shortages, but the paper market doesn't care." This dissonance is unnerving CEOs who rely on hedging physical production costs with futures contracts. They now face a paradox. Selling futures can hedge risk, but forced market drops increase volatility and threaten long-term capital stability. 2. Physical market strain. Meanwhile, silver investors report skyrocketing premiums for physical delivery. Dealers in New York and Singapore have cited shortages of bullion bars, restricted shipments, and delivery delays. This gap between physical scarcity and paper pricing has intensified the narrative that the silver market is no longer real in the traditional sense. Many executives are now adjusting corporate hedging strategies to account for physical shortages rather than relying purely on futures markets. Geopolitical tensions and industrial demand silver isn't just an investment asset. It is critical in industrial applications, including electronics, solar panels, and medical devices. CEOs in manufacturing-heavy sectors warn that the silver supply shortage is beginning to impact production planning and cost projections. Simultaneously, geopolitical developments are exerting enormous influence on silver pricing. US-China trade relations. Potential tariffs or sanctions could constrain industrial silver demand or disrupt supply chains. Middle East stability. Political tensions often drive safe haven buying, directly influencing the market despite paper futures volatility. Technological innovation. Growth in electric vehicles, 5G infrastructure, and renewable energy continues to push industrial silver demand higher. A senior supply chain officer at a multinational electronics firm told analysts, "We are sure having to reconsider silver sourcing entirely. Futures prices may swing wildly, but physical delivery risk is our real concern. Without silver, production halts." These dynamics are prompting CEOs to consider direct acquisition strategies, securing silver reserves rather than relying solely on futures or ETFs. Institutional forces. Who's really moving the market? Recent analysis suggests that a small number of institutional players hold outsized influence in silver futures. Large banks and hedge funds. Their derivative positions can trigger cascading liquidations. ETF operators. Silver-backed ETFs dominate retail investment flows but can exacerbate volatility during mass redemptions. Algorithmic trading firms. These entities execute trades in milliseconds, magnifying price swings and often creating artificial trends. A veteran Wall Street commodities strategist explained, "It's a feedback loop. Margin calls, automated selling, ETF redemptions, all feed into each other. The retail investor sees chaos, but the market itself is being engineered in real time." Warning signals for investors and CEOs. Given this new reality, executives across sectors are sounding alarms. 1. Volatility will persist. The market is structurally primed for rapid price swings, making futures and leveraged instruments risky. 2. Price discovery is broken. When paper markets ignore physical shortages, market signals become unreliable for hedging and strategic planning. 3. Diversification is critical. Many corporate treasury teams are now recommending holding physical silver or alternative assets to mitigate market manipulation. Some CEOs are even advocating for industry-wide collaboration to stabilize supply chains, secure delivery commitments, and reduce exposure to sudden paper market shocks. a market in transition. It's clear that silver today is no longer a straightforward commodity market. It's now a complex ecosystem where physical supply shortages coexist with massive paper positions, whilst automated algorithms can dominate price action. Geopolitical events and industrial demand are intertwined with financial engineering. For investors, the challenge is clear. Do not rely solely on futures or ETFs for exposure to silver. Many top executives suggest blending strategies, including physical holdings, long-term contracts, and careful monitoring of industrial supply chains. CEO strategies, hedging the unhedgeable. Several corporate leaders are taking aggressive steps to manage risk, securing long-term silver supply contracts with mining firms, increasing physical inventory holdings, even if premiums are high, diversifying hedging instruments beyond standard futures to options or structured products, monitoring macroeconomic signals like U.S. interest rates, currency strength, and inflation indicators. These strategies reflect a shift in market thinking. Silver is no longer a commodity to be speculated on lightly. CEOs now treat it as a strategic industrial asset with real operational consequences. The bigger picture, market integrity at stake. If structural issues persist, analysts warn of wider systemic implications. Trust in futures markets may erode. Retail investor confidence could decline sharply, fueling extreme volatility. Physical delivery failures could trigger regulatory scrutiny or intervention. One senior financial executive summarized, "We're in uncharted territory. The rules of engagement for silver markets have changed, and it's forcing companies, investors, and regulators to rethink everything." Conclusion: silver is a cautionary tale of the silver market. This recent behavior is a stark lesson in modern market fragility. A combination of algorithmic dominance, margin mechanics. Ever wonder what the big players in the silver market are thinking? What do CEOs and institutional investors know that we don't? Today, we're diving deep into the insider strategies, predictions, and the future of the silver market. We'll uncover how the pros are navigating the current structural chaos and what tactical takeaways you can use for your own portfolio. Let's get started. For years, the silver market has been a roller coaster of volatility, but recently, something has shifted. We're seeing a level of structural chaos that is forcing even the most seasoned investors to rethink their strategies. So, what's causing all this turmoil? It's a perfect storm of factors: persistent inflation, geopolitical tensions, a global push towards green energy, and a fascinating disconnect between the paper market and the physical demand for silver. Let's break down the insider perspective. I've been analyzing interviews, shareholder letters, and market reports from top mining CEOs and major institutional players. The consensus is clear. They see a significant structural deficit in the silver market. For the last few years, demand has been outstripping supply, and this trend is accelerating. Industrial demand, which accounts for over half of all silver consumption, is exploding. Think about solar panels, electric vehicles, and 5G technology. They all need silver and lots of it. One mining CEO recently stated that the demand from the solar industry alone is projected to consume nearly all of the new silver mined each year within the next decade. That's a staggering prediction. It means other sectors, including investment demand, will be fighting for a shrinking piece of the pie. The big institutions are taking note. They're not just buying silver ETFs anymore, they're increasingly looking to secure physical bullion and even stakes in mining companies. They see the long-term picture and are positioning themselves for a potential supply squeeze. This is where the idea of structural chaos comes in. The traditional pricing mechanisms, heavily influenced by the paper markets like the COMEX, are struggling to reflect this physical reality. We see days where the paper price of silver drops, yet premiums on physical coins and bars remain stubbornly high or even increase. This disconnect is a huge red flag for insiders. They believe the paper market's ability to suppress the price is weakening. Why? Because the physical inventories in exchange vaults like the COMEX and the London Bullion Market Association are being steadily drained. Think of it like a game of musical chairs. Every time a large buyer takes physical delivery, a chair is removed. The insiders see that there are far fewer chairs left than the number of people who think they have a claim to one. This creates immense fragility. Any significant event, a major supply disruption, a surge in investment demand, or a crisis of confidence in the paper market, could trigger a dramatic repricing of silver to the upside. So, how are these insiders responding? Their strategies are multifaceted. First, the mining companies. They are aggressively exploring for new deposits, but this is a long and expensive process. It can take over a decade to bring a new mine online. In the meantime, they are optimizing their current operations, and in some cases, stockpiling a portion of their own production, waiting for higher prices. They are acting not just as producers, but as investors in their own commodity. On the institutional side, hedge funds and family offices are moving beyond simple paper positions. They are creating dedicated funds to acquire and store large quantities of physical silver. They understand that in a real crisis, possession is everything. A paper contract might not be honored, but a vault full of physical metal is undeniable. Some are even engaging in direct offtake agreements with miners to secure a future supply stream, bypassing the exchanges altogether. This is a massive vote of confidence in the long-term fundamentals of silver. Now for the most important part, what are the tactical takeaways for you on the individual investor? How can you apply this insider knowledge? First, understand the playing field. Recognize the difference between the paper price and the physical market. While the daily spot price is a useful benchmark, it doesn't tell the whole story. Pay attention to the premiums on physical products and the inventory levels at major exchanges. These are the real indicators of market tightness. Second, consider your time horizon. The insiders are not day traders. They are playing the long game, positioning themselves for a trend they see unfolding over the next 3, 5, or even 10 years. Patience is key. The volatility we see is noise within a much larger, powerful signal. Don't get shaken out of a good position by short-term price fluctuations. Third, diversify your silver holdings. Just as the institutions are diversifying their approach, you can too. This might mean having a core position in physical bullion, coins and bars that you hold yourself or in a secure, allocated vault. This is your insurance policy. On top of that, you could consider high-quality silver mining stocks or silver-focused ETFs. Mining stocks can offer leverage to the silver price. If silver goes up 50%, a well-run mining company's stock could go up multiples of that. However, they also come with their own set of risks, like operational issues or political instability in the regions where they operate. Fourth, dollar-cost averaging is your friend. Instead of trying to time the market perfectly, which is nearly impossible, commit to buying a set amount of silver on a regular schedule, whether it's weekly or monthly. This strategy smooths out your purchase price over time and forces you to buy more when prices are low and less when they are high. It's a disciplined approach that removes emotion from the equation. Let's look at the future. The predictions from the inside are bold. Many believe we are in the early stages of a historic bull market for silver. They see a future where silver's monetary role reasserts itself as faith in fiat currencies wanes. At the same time, its indispensable role in the green energy transition provides a powerful and growing demand floor. Some analysts are forecasting a silver price that seems unbelievable today, talking about triple-digit silver not as a possibility, but as an inevitability. Their reasoning is based on historical ratios, particularly the gold to silver ratio. Historically, this ratio has been around 15 to 1. Today, it's closer to 80 to 1. For silver to return to its historical average relative to gold, it would require a massive price appreciation, even if gold's price stayed flat. The structural chaos is actually an opportunity. It's creating a scenario where an essential commodity is significantly undervalued due to market mechanics that are becoming increasingly unsustainable. The big money sees this. They are quietly accumulating,